Hello, Warriors. How's everyone doing? Hi, John, Patrick, Kareem, Ziggy. Everybody doing okay? Today is Norm Winsky Day. Today is the day that Norm thought we were entering a window for a top in the S&Ps. I want to start off with Bitcoin. I showed it yesterday as a potential 3 drive on the weekly. So I don't have to depend on my own expertise being part of the team here. It's a big edge for me. So I went to see what Grega was thinking in Bitcoin here and confirms what I'm seeing on the weekly. We had a big hit in Bitcoin yesterday. We're starting off lower today. Grega's looking for one more push up. This is a 4, and this will complete big wave 3. And I'm not an expert Elliotician. I call myself an amateur Elliotician. But I do know from people that have traded Elliott over the years that they really don't go with the trend after 3 is complete, because 4 could be deep, very deep, and then 5 may only be, kind of a retest of the high, not looking for a ton above the end of wave 3 for 5. So this is mainly the meat of the move, unless it becomes even more parabolic. So having Greg on the team confirms my view that you got the most out of Bitcoin up here at 6 grand, and we pulled back. There could be one more shot to complete it on the weekly up here. Everyone with me? I don't know how many of you are trading Bitcoin right now. I'm sure there's a few of you that own it. You never go broke taking profits. Bernard Baruch says, I take that to heart. So it being Norm Winsky Day, and when I bring guests on, it's not just to fill airtime. Sometimes if it's the first time I've interviewed somebody, just like you, I really don't know what to expect. But when I bring guests back again and again, and over the years, I've interviewed Norm on FX Street in LAR, and we've had him here, I think, 2 or 3 times since we started this. It's worth paying attention to with Norm. So here we go. I have a news flash. I know it's going to shock everyone. The S&Ps have made a new high. News flash. Anyone surprised that the S&Ps have made a new high? I think people would be surprised if it sold off 2%. Not that it made a new high. Everyone with me? So we're looking at the weekly here, lots of mo. There are a few time frames that were still diverging. The 4-hour being 1, here was a confirmed high. Looks like a wedge. We're getting a little bit of a wick here. I'm going to go with Norm Winsky and take a short here, risking 13 handles. I think it's very possible that we trade back down to the 200 moving average on the 4, down to 25.10. So if I'm not an S&P trader, what do? Yeah, Eric, you're stunned. So I'd look at the end crosses. So everyone knows last week I got lucky and I caught the top of this rally in Euro Yen here. You're welcome, Matthias, and welcome to our room as well. So last week I was talking about scale in shorts up here around the 280 to 320 level. That was a pretty big trade. So S&Ps are making new highs. Early in the week, I thought we could get to 250, 260 in here. Just a 50% retracement here on Euro Yen. I think there's a very good possibility between here and 61.8 that this rebound runs its course, especially if we're within 48 hours of at least a temporary high in the S&Ps. So I view this as an opportunity to begin to scale in to some shorts between here and 61.8. It comes in around 32.80. And that eventually, I still think it's a descending triangle, and we're going to break to the downside. I have too many fibs up there. So the 4 hour. So we have this flat line here. Looking to sell this. If we fail here, it'll be the second lower high. Measured move is pretty deep down towards 128. Dixie is threatening a breakout. But I still think that there's a possibility that we don't make a new high and we still get some type of ABC before we break out. A lot of people on the long side of the dollar train. In fact, I saw Mark Newton, who I've interviewed here a few times on CNBC. He's turned bullish, looking for 96, 97. He was on after the market closed on CNBC, I believe. But we could still do a little bit more work here. Pull back one more time before we get this breakout on a close over 94, which is going to project to 97. Everyone with me on that? So when I look at some scalps, the yen is very strong, but USD CAD put in kind of a negative day yesterday, and crude is on the verge of breaking out. And then we came off. So I think it's possible that we're still going to test these lows in Canada one more time. To me, this looked pretty impulsive yesterday afternoon, although it's only a 2 drive. So I'd be looking for fib retracements here in Canada as well. Kirk Spano, who I've also had on, who's the energy specialist and has been very bullish crude. He's talking about $80 crude. Of course, Kirk believes that there's going to be conflict between the U.S. and Iran. And he said this way before President Trump decided to decertify the nuclear deal with Iran and toss the potato to our Congress. So it's very possible if we're going to have even $60 crude, which I think is a possibility. I've been talking 62 for quite some time, that we could still get some pressure in Canada to take it back down one more time. Everyone with me? So here's your oil, and here's why I think we could go to 62. I know Blake's looking at it up against a major trend line here, but my whole rationale for 62 is off the weekly from last year. So we have this falling wedge here, and the wedge line came in at 62. And my belief is that wedges can retrace 100% of the move. So this was kind of the look on it, looking at the weekly chart. So I anchor it here. I could either go here or here. We'll just go with this. Okay, so the top of the wedge is 62 right here. And coincidentally, the 200-week moving average is coming in at 60 as well. So if that happens, even though the correlation is broken down for quite some time with crude going sideways and USD CAD going down sharply, I think a move back up to here could put some pressure on Canada. You never know when correlations can reconnect. Everyone with me on that? And here's the yen trying to turn good up here. All right, I still thought that there was a chance that we could trade back down towards the 111 level. The 112.50 area was pretty important to me. So this is looking pretty powerful, but I wouldn't chase it. And I still think that the euro yen, when I put the whole equation together, this could still end up being a failing rally in the end, just like in Canada, and the dollar comes back. So this is really the trade I'm focused on, is euro yen being a retrace rally, and the S&P's looking for reversals in the next 2 days. If it doesn't happen, then I could throw Norm's research out the window. One thing he says is if it doesn't happen within a day or two of its turning point work, it's not going to happen. So we should know in the next couple days. Looking at gold down here, it's doing nothing right, but we are beginning to retrace this recent rally. I would not be pressing the short side of gold down here. Pretty oversold. Perhaps we even hold in here and we get another advance out of it. So my key is on the euro yen. Something to pay attention to that I learned from Chris Laurie, who's a legend. We had Chris here. It took me years to get Chris to do an interview with us, and he was a big proponent of Aussie yen being the leading risk barometer. And as I look at Aussie yen up here, although we've taken these highs out, it may have just been a stop hunt. So I still think that there's potential for a decent short here as well. As you can see, we're not confirming this new high. So looking for shorts in S&Ps, Aussie yen, and the preferred short being the one that's not making new highs through the move, and that would be euro yen. So I want to thank everyone for their attention today. Also, invest in your trading performance future by being able to have the traffic light page here. You can't drive without traffic lights, and having our traffic light page here, which is pretty simple. You know, green is a go, yellow's a caution, and red is a stop. And then having the ability to see everyone's different analysis on it. That's what I really love about ForexAnalytix, is I can get the macro from Stelios, and I could get the candlestick from Steve, and I could get the basic technical from Blake, and I could get the harmonics for Nick. You know, before I joined the team, I would have to hunt through Twitter to get the research, and, you know, only a tease. You know, a lot of people would put out work, but not want to give it all away. We give it all away here. So I have Nick here as well, and Grega, who I interviewed on FX Street because he won an award on FX Street. It's all at your fingertips. So that's my pitch for something I have conviction in. One of the best teams on the net. Oh, you're very welcome, Catherine. You're very welcome, David. CAD Yen, okay, we could take a look at CAD Yen. Steve is here. He covers the whole board for us every day, does a great job.
Yeah, Dale, I'll good morning, mate. Good morning, everybody.
Hi.
I'm going to have a look. I'm good. I'm going to have a look at it later on, of course, unless Blake decides to do it first.
Okay. Without further ado, maybe Blake is here, and he could update us on his views with what's happening today with strength in the yen. And we're probably, Blake, still in no man's land in the dollar. We haven't broken out. We're threatening. So I'm very interested in what your viewpoints are here today, my friend.
Hey, good morning, and good morning, Steve, too. I just heard his voice. Can you hear me?
Yes.
Okay.
Loud and clear, bro.
Good. Okay. So actually, somebody was just asking about the Canadian yen. This is a pair that I've got a short on, and it's, you know, the yen is, it's actually weak. So the yen pairs are strong right now, and
right.
we have this Canadian yen. Something I, you know, Chi in our chat room had noticed that there was an inverted head and shoulder pattern here, and it basically just completed. So it's really just in the midst of completing right now, and you can see that we might make it a little higher to maybe 90 and a quarter. We've been as high as 90 and 90.13 today, but we have like this inverted head and shoulder pattern, which is also takes us to the underside of this trend line. Well, we're tagging the underside of the trend line right now, and you know, when you're dealing with all the yen pairs, there's obviously a tick up in risk appetite. I mean, stocks are strong. Stocks are going to open at all-time highs today. There was an article.
Shocker, Blake. It's a shocker that the S&Ps are at new highs.
So when I got up this morning, I'm like, man, why is the stock market so strong? And there's Simon had passed along an article from Politico, which is really, it came out around the time when the market started rallying, and you got to read, well, the headline and then read some of it. Treasury Secretary Mnuchin, he says, pass the tax bill or the markets will tank. Now, this came out in a podcast at like 5 o'clock in the morning, Eastern time.
Wow.
That he basically says there's no question that the rally in the stock market has baked into it reasonably high expectations of us getting a tax cuts done and tax reform done. To the extent that we get a tax deal done, the stock market will go up higher. But if there's no question in my mind, if we don't get it done, you're going to see a reversal of a significant amount of these gains. So that which I find very interesting, that a Treasury Secretary would comment on, stock market gains and, and what they're, basically, that's a warning to, to Congress that if you don't get this tax bill done, the stock market's going to suffer, which, this is a guy remember, this is a Goldman Sachs head too. That
another surprise, Goldman Sachs. I thought we were going to drain the swamp.
Well, yeah, that has not been the case. But anyway, the stock market is up as a result. I would assume these comments are just part of everything that's fueling the fire behind these markets. But you can see, like, the Canadian yen's challenging the underside of this trend line, that it's broken. Euro yen, you had mentioned it. I mean, we're coming right up to the underside of this trend line as well, and towards 161% extension at 132.60. So we're coming right into, the danger zone if you're long. And then obviously if you're short, and I have a short in the euro yen too, I'm being very cautious at these prices. But at the same time, we have the stock market, which is moving higher. There's no, we had a possible ascending wedge. We're breaking once again to the upside. So the stock market looks strong. You have gold, which gold is at the 618 retracement right now, and that's pulled back a lot more aggressive than I had originally thought it was going to. And then you got bonds that are weak as well. It's all fueling. It's all the same trade basically. Gold down, bonds down, yen down, dollars higher, stocks are higher, and it's all moving in unison right now. It's very, very, very correlated. So, that's another thing that you gotta think about when you're trading these markets, is the correlations are quite tight at the moment, and everything is moving together. As low as volatility is, and as as tame as volatility is, it's keeping all the same asset classes moving together. So
one point, Blake, I know I do too often. I interrupt people all the time, but just one point on volatility. The market's making new highs, and the VIX is not making new lows. I know that has happened before. It's not, a huge event, but check it out. I mean, we've traded under 9. We're at new highs in the S&Ps now and still holding 10. Just could be a little tell here.
Could be.
Yeah, actually, sorry to interrupt, Blake. I mentioned that yesterday in the chat room. Yesterday, volatility was up more than 7%, and SPX, for example, closed up 0.01%. So in essence, flat. So this is a divergence, yes.
It is, but historically.
Yeah, it's happened.
Yeah. I mean, you look at the VIX. I mean, the VIX doesn't trade much below 9. I mean,
That's my EKG on anesthesia.
Yeah, that's it. I mean, it's really just I mean, it's at historically low levels, which which is interesting because everybody's short volatility. I mean, you want to if the market ever does see any type of sell-off, which it doesn't. Every day we look at the market and we go, well, the market might sell off here or might sell off there or it might turn here, but it hasn't. But if the stock market does eventually turn, the volatility is going to be the first thing that's going to rise, and that's going to be, you know, probably, in my opinion, for those of you that can trade volatility, probably one of the best trades out there is when the stock market rolls over, is just buy volatility, because it's going to rally quite substantially, I would suspect. But, you know, again, stocks continue to rally. The yen stays weak. Gold is at a 618 retracement. You know, there's potential for the stock market to turn, but you know, I heard you wanting to take a shot, Dale, at the stock market. I mean, frankly, I'm looking at equities, and as long as the S&P is above this trend line, I don't see any real reason to be on the short side. You know, as everybody tries to catch the top, you know, everybody's trying to, you know, catch the highs, and you know, this may be it. Maybe today is the day. But looking at what we're seeing, especially you got bonds, you got the 10-year selling off, the 30-year weak, gold is weak, the yen is weak. I don't know if there's much reason for.
What would be a reason, technically, Blake? You showed that formation. What would be your first sign? Getting back inside that formation or breaking that wedge?
The S&P. Well, you know, you often talk about like a throwover, which is, you know, a break of a wedge, and it breaks higher and then reverses. That would be it. So I mean, if you saw like let's see, like let me draw it really quick. Like let's say later today, you get a reversal here, and you see a red, red pop in like that. That would be it. I would be at that point in time going, okay, now here it comes. This is because then it squeezed everybody out this morning, right? Like that. Right. So you get everybody squeezed out of their shorts, and then a reversal, and then we're talking for probably a relatively decent pullback from there. But until I see that, I'm not sold on the idea that the stock market's going down yet. And also, one of the things that I wanted to talk about this morning regarding the yen pairs, and this is something that I'm paying very close attention to because I have yen exposure, which is not working for me at the moment, is pay attention to the Nikkei. I mean, the Nikkei continues to. I mean, you have to also look at the daily charts and realize that. I mean, the RSI on the Nikkei right now is at levels that we don't see that often. So
where is it? 85, almost 90.
We're at 80. We're at 80. Yeah, we're closing in on 80. I guess 80. RSI is at 85 and a quarter, and we've been we sometimes make it up to 87 or have made it up to 87, but we're in nosebleed territory in the Nikkei, and so but also at the same time the Nikkei is breaking out. I mean, if you look at a weekly chart, I mean, this is what the Nikkei looks like. I mean, we're breaking some pretty key resistance. I mean, there's obviously some more resistance up ahead, but near term there isn't a lot that's in our way. So the Nikkei continues to move higher, and as long as the Nikkei is pressing higher, the yen's going to stay weak as a result to this. So that's something else to just to keep in mind. I'm
tilting my head backwards in nosebleed territory, buddy.
It is. I mean, look at the hourly Nikkei. I mean, it just continues to grind hard despite the divergence in the markets. It continues to press. So very, very strong moves and very strong moves in equities at the moment, and very strong moves in Nikkei. And I know I talked about this last week, but I'll reiterate, and it's kind of like what Mnuchin said, is that the stock market is really banking on the fact that we're going to get this tax deal done, and when a tax deal gets done, which I think it will, and some tax reform gets done, at that point in time might be the catalyst that the stock market does the buy the rumor, sell the news, and and then we might see a reversal of equities. But until then, you know, and we're talking, you know, by year end. So I mean, we could get, you know, a continuation higher into the winter months. I mean, and the stock market doesn't look like it has any signs of reversing at this point in time. I know it seems like a little far-fetched, and maybe there's going to be a reversal between now and then, and maybe there's something that a catalyst that drives us, that actually pushes us lower. But at this stage in the game, I mean, it is, you know, pretty. I mean, it's pretty one-way traffic right now, and it's tough. It's as a trader, it's really tough when you don't have two-way action, and it's just one-way action. You either gotta, you know, stay out of the direction of the market, or jump on, and it's hard to jump on when it's been going up for so many months and months and months in a row. And
yeah, I think you have to be either naive or greedy, because most traders would go, wow, you know, this is way overdone. So it's the people that, you know, have not seen gravity in the market before that think it's normal. So there's either some naivety or there's, you know, extreme greed. But, you know, those are the people that make killings at times vis-a-vis Bitcoin.
Yeah, I mean, well,
Yeah.
it's one of those situations where you're like, listen, you know, why fight it at the moment?
Yeah.
I mean, I think everybody's looking around at the markets thinking the same thing. You know, the stock market continues to go higher, and I don't know why it's up here, but it is up here, and so we have to just continue to trade it as such. So, you know, with that being said, you look at today and you look at, like, you know, the dollar. I mean, the dollar is giving us a little bit of action because at least the dollar isn't on a one-way, you know, street as of right now. You know, the dollar, there is some two-way action, but it's hard to trade the dollar with any type of correlations when you have the stock market just moving, you know, straight up. Now, you know, we've been talking, and let's talk about the dollar index for a little bit. The dollar index, you know, warned you on Friday that we're, you know, at really key support, and the potential of forging out the right shoulder of an inverted head and shoulder pattern is quite real. We have stopped at the 618 retracement, and we're kind of struggling up here. So, you know, one of the things that the dollar is really looking at right now is not only the tax plan, but also the potential of changing the Fed chair, and you know, a John Taylor nomination would be, as we talked about this yesterday, would be a very strong, in my opinion, a strong catalyst to buy the dollar. It would be, you know, probably the one thing that, you know, I'm looking at that would say, okay, all right, you know, the dollar is probably ready to go higher. And the dollar is in a very tricky situation right now. But as you can see, we're at the 618 retracement. We hit it yesterday overnight. We surged above it, and we're struggling a little bit, you know, still at this this key fib level. And I think it needs to be watched because, you know, is there a potential for a false, you know, breakout of the dollar from overnight? You can see this 4 hour, and this happened in European trade. Is there a potential for a false breakout in the dollar? It's possible, and we, even though we have some data today, we have here in just 2 minutes, we actually have building permits and housing starts. And we do have the beige book a little bit later today as well, but that shouldn't move the markets. I don't think the housing data is gonna move the markets much. I mean, you know, the housing data might move the dollar pairs 10 pips or so up or down in the major currency pairs, but I don't think it's going to be a catalyst to really be the driver. I think the driver right now is really, you know, the possible tax reform, and also, you know, the Fed governors, and Donald Trump is meeting with Janet Yellen tomorrow for lunch, and you know, she could very easily say, I don't want the job, and be out and then the market might get some volatility as a result of that. All right, so stand by. We'll just keep it on the dollar index. We have some economic data coming out right now, and it looks like it's a little weaker. Let's see here.
Blake, I'm curious, why do you think they're going to be, when they haven't been able?
Very
Go
strong
ahead,
manufacturing sales from Canada. Sorry to interrupt. 1.6 versus minus 0.3.
Yeah, that is pretty strong data. So the housing data came in a little weaker. Building permits came in a little weaker than expected, and that pushed it down. Yeah, that Canada manufacturing data was strong. I'm sorry, Dale. What did you ask?
I'm just curious why you think they're going to be able to get a tax reform package done when they haven't been able to get anything else done.
You know, I think it's I think it's going to be. I think it's something that's universally both sides really want to push. You know, it's one agenda item that I think that both Republicans and Democrats can
got it.
You know, agree to that. There's
get votes with.
Right, and
I mean, isn't that the bottom line? So yeah, they can vote.
It is. Right. It is, and so you know the dollar's not, you know, as you can see, the dollar's really not moving a whole lot. You know, the euro came off of you know, just a couple of pips here and there, and the pound's trading pretty heavy. Dollar yen didn't move much. And so the market's, again, real quiet. I think the market's probably laser focused on what's happening in equities more than anything. But this Canadian manufacturing sales came in pretty weak, or pretty strong, excuse me. And I picked up some dollar Canadian overnight at 125 last night. And one thing about the Canadian is, and we have these NAFTA talks that have kind of fallen by the wayside. That's something that, in my opinion, if you're long the Canadian currency from yesterday, I'm a little fearful of that, because I think that the risk is that with you know, basically no one coming to agreement with NAFTA, you know, the risk is Donald Trump could go, you know, hey, I want to put in my 6-month notice and walk away from it, and whether or not he has the power to do so is to be seen. But that could really shake things up in the Canadian and Mexican peso, for that matter. And the peso actually strengthened yesterday after the NAFTA agreement. After the press conference. Same with the Canadian. The Canadian fell, but I think that was more from a positioning standpoint versus you know. I think people were positioning for, you know, weak in you know, shorting the Canadian, shorting the peso going into the press conference, and then, you know, because nothing happened, they reversed those positions. But I think that was a buy the rumor, sell the news type of event. Anyway, it's one of those sessions that I think all eyes are on equities, and seeing where equities are today is going to be the focus of the FX market as we hit new highs once again.
So I got lucky on calling for a decline in Canada. I didn't know about the news, but it's starting to look like a flag off an impulsive move on the 4-hour, 1 hour. So
yeah,
you know.
Well, you know, we'll see what the Canadian does here, and I think that, you know, we also risk at a double top too. But also keep in mind that there's a very, very big position. Traders are very long Canadian dollars at this point too. So with that being said, I'm going to pass it over to Steve this morning. Good morning, Steve.
Hey, Blake.
Hey.
What's up?
Nothing much. You know, I figure I'd leave the crosses to you to tackle here. Obviously,
yeah, I'm happy to show them. We actually have, you know, we do have things to talk about. For example, I don't know if you mentioned it, because at some point I was in a fast call. We got good data. We mentioned yesterday that we're expecting some data from the UK today. we got actually the data beat expectations by a little bit, and still the cable is lower. I mean, that tells me quite a lot about it. I mean, it gives more credibility to the rejection we had from the 50% feed. Now, having to do with stocks, I couldn't agree more with you. I mean, it seems that we're breaking out from this little ascending triangle we were making, but I honestly believe, you know, that we're going to see one last push. I had already drawn out something like that since, what is it, 1, 2, 3, 4 days ago. And I really believe, I mean, in this case, I'm putting my my money where in what I'm saying, because I'm short. I added to, you know, actually at 2,560, as I had promised. I saw that we also had a question about it in the question box. So yes, I'm still short the SPX, and I really believe that it's a matter of days for us to have some type of a correction.
Do you follow the Fear and Greed Index, Steve? Because Matthias asked a question about that.
Yeah, I see. Fear and Greed Index made a new 3-year high days ago, and now is back on lower levels while markets are rising. Could this tell us that the rally still has potential? You know, I saw that the Fear and Greed Index, if I remember right, it actually hit 95. Which was a new high. If I'm not mistaken, it was 95 with, for those that don't know, it has a minimum of 0, theoretically speaking, of course, and the maximum of 100. I do think that stocks will push out of this triangle, like, you know, a little bit higher, but I do believe that the market is extremely stretched. The vast majority of the indices are actually hitting resistances. For example, we've shown this channel a long time ago in the Dow Jones. It's actually hitting resistance. The Nasdaq is also very, very close to the level we had indicated several days ago, which is the 161.8 of this move at 6,145. We're currently only 20 handles lower than that. The SPX is about to push once again towards this channel high after having overthrown on this channel. The DAX is also moving from one all-time high to the other. The Dow Jones, since I mentioned it before, I think it has given us something like 8, 9 fresh all-time highs during the past 12 days, if I remember, something like that. And I do think that, you know, I don't know what's going to be the catalyst, but I think that one of these days, perhaps even within this week that we're speaking, we should have something that will give us some type of a correction lower. I'm not expecting too much. So if the question has to do with a medium to long-term trend, you know, I don't have expectations that the rally is going to reverse right here, right now, but I do expect that some healthy corrections, although the word healthy for the US stock indices is probably, you know, the wrong term to use, but a pullback to, for example, at least 2,510 in the SPX from wherever we find ourselves during the next few days, or even a little bit lower to 2,490, will happen to steam off a little bit, to cool off a little bit this you know, this non-stop move that we've been seeing higher. It's actually like creeping. It's a creeping move. It's a very weird move. We've been seeing negligent to zero ranges, minimum volume. It's a very weird situation. I mean, it's very unnatural for an actual market that supposedly, you know, humans participate in. So I'm expecting some kind of a pullback first.
Maybe it's because there aren't as many humans and more algos.
Yeah, I agree with you. That's my point, actually. That's my point. By the way, Stelios is here. Stelio, am I right about the UK data today? We had a little bit in earnings, didn't we?
Yes, we had basically the two numbers that the Bank of England are looking at very closely are inflation and average earnings plus bonus, and they look at the difference between these two. So inflation ticked up to 3%, and also average earnings also ticked up to 2.2%, although the market was expecting a 2.1%. So this gap is kind of steady at the moment, and as this gap widens, it's a squeeze on the income of the average person. So you want this gap to tighten as much as possible. So the market was expecting a little bit wider gap. It didn't materialize. So, you know, the UK is trying. Inflation is higher than it should be, but wage growth also is kind of trying to keep pace. So it wasn't as bad. It was slightly better than the market expected. The pound actually hasn't done much today, which is a bit strange. Actually, it's weakened a little bit, but overall, you know, the medium-term outlook for me is the same. It's unchanged. So I still think the pound is going to should perform quite well into November, when I think they're going to hike. I think.
Stelio, what are the chances the markets give at the moment for a rate hike actually from the BOE?
I haven't checked the Sonia prices today after the numbers, but I don't think they're much changed. And I think November is priced in almost like 80% now. So, you know, we're getting to a point where if it's priced more than that, then obviously a good risk reward. Short-term trade is probably to be short the pound. But I still think they're going to hike in November. I've been saying this for weeks, even when.
Depends, Stelio, because don't forget that this is going to be the first hike after several years, plus. Yes. After an unexpected, anyhow, not certain rate cut that they did after the Brexit event. Yes. So, although you're absolutely right, mathematically speaking, that, for example, if we end up like pricing 85 or 90% chances of a rate hike, of course, you know, any kind of disappointment, if they don't hike, obviously, is obviously going to, you know, to push the pound quite lower. But on the other hand, being the first rate hike has also the potential of not just giving us a single rate hike, but also some forward guidance that will make the market think that, yeah, okay, they hiked, but they might be looking into hiking more aggressively in the near future. So having to do with building expectations, even with a 90% chance, for example, if it ends up there of hiking, I think that they can still push the pound quite higher with whatever they deliver along with the rate hike.
Yeah, I agree. And if we look at the term structure, I mean, I can't remember the details exactly, but there's almost one price in November and a little bit more next year. But it's not like the market's pricing in a proper, you know, rate hike, the sequence. So they could very well.
Imagine if the market ends up pricing, for example, 3 rate hikes until the end of 2018, right?
It's unlikely, but you never know. You know, it depends on what they're going to say. And also, they could not hike in November, but the forward guidance, like you said, could be in such a way that the pound could still not suffer much. You know, it doesn't mean that it has to reverse everything. It could very easily just take the rate hike expectations, move them onto the January or March or wherever. So it's a tricky one. I still think they're going to hike, and as I said before, I've been saying this from when it was less than 50-50 priced in, which makes sense because they need to reverse that rate cut from last year, which was, in my opinion, completely unwarranted. You know, it didn't do anything anyway. So apart from the psychological aspect, the message that they gave the markets. So it's going to be interesting to see what they actually say with the hike when they do deliver it in November.
Yeah, I totally agree with you. By the way, even more people are asking about the CAD yen. So let me be very, very clear about the CAD yen. And I made a mention yesterday to the chat room. I said specifically the following things. First of all, this is the weekly chart of the CAD yen, okay? The reason I want to begin with that is to look at something that we've seen plenty of times, and I'm really putting a lot of focus on it. It is the following. The CAD yen has had 4 consecutive negative weeks after obviously a very strong run higher. Okay, we had 5 consecutive weeks higher after a correction lower, and now we've had 4 weeks that we were trading lower. And until yesterday, we were actually forming the 5th negative week. And my comments yesterday were actually as long as the week was still in negative territory. What I said yesterday to the chat room, what I wrote at some point was the following, that within 5 trading weeks that we've been moving lower, we hadn't even retraced the last bullish weekly candle that we had. So when you see 5 weeks of a move lower that haven't even retraced one of the 5 bullish candles that we had, in my mind, there is absolutely no question of if this move is corrective or impulsive. The move lower is clearly, from a technical perspective, corrective. Today's price action that already has transformed a negative week, of course, it's still early in the week, but I'm going to comment with what I see now, as I did with what I was seeing yesterday. It has already transformed the week to a key reversal, to an outside white candle. As you see, the area that created this support was, the inverted head and shoulders neckline. So let me go back now to the daily chart. Especially if we break above, this descending channel resistance, I have zero doubts that we're headed higher. End of story. That's it. It's as simple as that. It's as simple as that. And I repeat, I made this exact comment yesterday when we were actually near the lows. Okay, just by looking at the weekly candle, the weekly candles. Also, if I remember, Olivier from the chat room also sent me a message yesterday asking me, about the CAD yen, and I told him specifically that, listen, as long as we trade above 88.80, this is the only level you should be watching. Forget about anything else, because he was showing me several trend lines that he had drawn, some of them which were looking like being broken to the downside, like this red one I had, and I told him, forget about all that. Just watch 88. Hey, Grega.
Hey, what's up, Steve? How are you?
Welcome to the party. I was saying, Grega, and it's good. You're actually popping up at the right point. I was saying that for me, CAD yen, the fact that within 4 weeks we didn't even retrace, and even this week that we went lower initially, we didn't even retrace the last bullish candle. For me, it's a very bullish signal. I think that the price action that we have seen lower is clearly corrective. This is also a bull flag in my opinion, and we're headed higher. I don't know what do you see from an Elliott wave perspective.
Share me a screen, please.
Should I pass the screen to you, you mean?
Yes,
hey.
sure, of course.
There you go.
Hey, Grega, the wizard.
How are you?
The wizard of waves.
Yeah,
Yes, I'm here finally.
I'm always showing your work, giving freebies of your work away here, Grega. Hope you don't mind.
Sure, why not? That's why we have webinars, right?
That's right, buddy.
CAD yen, as you said, Steve, yes, it's bullish for the short term, but I would be very careful once we reach a new high, and there's actually two reasons for that. First one is discount on the left, which suggests that we are in a fifth wave of a wave C, which means that I'm tracking a 3-wave rally from 2016 lows. I also suspect that stocks could find the resistance in the near future and turn lower for a pullback. So once this happens, I would expect that yen crosses would definitely be pulled to the downside. So I would watch out for limited upside, let's say towards 92.50 up to 94.50 would be my upward zone where I would expect a reversal. And actually
94.40, by the way, is also the 61.8, so that would be a very nice confluence.
Yes, okay, that's good to know. But one thing that I want to highlight is that actually I'm observing two potential wave counts. Now, first, my primary wave count is still here on the left, and I will now show you also the next wave count that I just saw it. It's actually also a 3-wave rise up from 2016 lows, but here in current wave C, what we could see is maybe an ending diagonal. Okay, it's a very strong pattern.
Yeah, I see it. A, B, 1, 2, 3, 4, 5. So another stock push higher.
Exactly. So actually, we have now 2 wave counts, which suggests that that upward momentum could slow down in coming weeks, maybe even coming days. Okay. Also, the next thing that we have to consider is the big picture. On monthly chart, we are actually moving sideways since 2016. Okay, and now if you take a look at each substructure, you can see that we have plenty of free wave structures. So here was a free wave move to the upside, topped out in 2007. Then you have seen a free wave drop towards 2009, then another free wave rise, and another free wave rise now seems to be unfolding. So if we respect the past price action and the personality of this cross, then definitely we can expect that upside could be limited. And if we consider that this market did not rise much with bullish stocks, then once stocks will turn into a pullback, that's definitely the time when CAD-yen could see a sharp move to the downside. So I would not be surprised if we see limited upside. So that's why I am watching these two counts very closely for limited upside. Let's say by the end of this month, maybe we could have some early evidences that top of a wave C is in place. So watch out for this fifth wave towards, let's say briefly towards 93 level, and same zones here for the second count, which is an ending diagonal, and probably even the most important pattern when it comes to reversals. Okay, so once we reach this upper trend line, I would watch out for potential bearish sign. Okay.
Greg, since you mentioned stocks, and since one of the huge benefits, in my opinion, of Elliott wave is that it's probably the best type of analysis to give you potential targets of a move. Is it something specific, a specific level? For example, let's take the SPX, which is the risk barometer. It's a benchmark, at least for stocks. Do you have now, according to the specific structure that we have, do you have a specific target for the end of this sequence before the correction lower?
Yes, actually, I'm looking at 2600 here level. It's if you take a look closely, okay, it's actually a 261.8% extension of this blue wave one. Okay, so this whole blue wave cycles could finish at 261.8% extension of blue wave one measured from blue wave two low. Okay, and then you have a 38.2%, which is taken of this move from the start of this blue wave cycle
to the end of wave three. Right?
Exactly, and you take 38.2% of this part, put it at the end of a wave four, and you get the same levels, similar levels around 2600. Also, there was a triangle here, potential triangle in fourth wave. So we know the triangle occur prior to the final move within uptrend. So this can be final thrust out within this current extended black wave free. So I would expect that market will find a top, let's say by the end of this year, and turn down for a correction. So in the start of 2018, maybe we could see lower levels here for stocks. Also, here's this trend line that I would pay attention on. It's an Elliott wave channel actually. So you connect points from wave 2 and wave 4 low, put the parallel trend line at the top of a wave 3, and you can see that we are now testing this region right now. Normally, stocks will push prices above this trend line.
What we call overthrow.
And overthrow, yes, exactly. It will be confirmed as a throw over once we get back into this channel, and that's probably time when I will say that black wave 3 has ended and that we are headed lower, or at least sideways, into a big consolidation for wave 4. Okay, so stocks right now I see them at resistance. So that's for the S&P 500. Dow Jones, also we are looking here for black wave 3 to be in progress right towards this target. I was looking for this extended fifth wave, red wave 5, which obviously could reach even higher levels here, but after a corrective pullback into wave 4, that again I think it may occur at the start of 2018. Also DAX, if you cover this one, same thing. We are in a blue wave 5 final stages with the red wave 5 ongoing right now, but even this red wave 5 has to be made by 5 waves. Here we have wave 1, 2, extended wave 3, which I think again it may complete the current sequence in the coming weeks. So watch out again for a pullback.
Greg, is there a difference in the count that you have on the DAX compared to the U.S. forces? Because that high will be 5 of 5, and when we complete in the S&P, it'll just be completing 3.
No, Actually, it will be the same. I'm
Okay.
expecting a fourth wave pullback on DAX here, black wave 4, as you can see.
Okay.
And
Yeah.
if you take a look on the S&P, also here's Dow expecting black wave 4, and here is S&P expecting black wave 4. So actually, yes, actually it's the same stuff on the global markets.
Okay. You're a natural teacher. Thank you.
You're welcome. But when it comes to trading, what I want to highlight when it comes to trading, it's still stocks. We need to understand that they are still in bullish mode. So at this time, if you are not in the game, if you are not in stocks right now, then you better wait on a pullbacks. If you want to short stocks, better wait on a first impulsive bearish leg to make sure that high is in. So don't fight this trend. It's still bullish trend, and normally stocks can have very huge extended fifth wave before they finally make a turns. So we don't know actually where this market will stop, because it's clearly in a very strong uptrend. So before you act, make sure that you have enough of evidences that would say that top is in place if you want either to go out of a stock market, or maybe if you want to wait on a deeper correction to go in. Yes, Steve.
Anything else you're currently, for example, how do you view the bounce in the DXY? We are once again pushing, towards the 94.20 level.
Still, I think that this is a correction. Okay, we still don't have enough evidences that would invalidate our previous outlook, which indicates that wave 4 maybe has ended here at the high of October 06. I still stay with this view as long as we are trading below this swing high. So no change for dollar here, but maybe we will just stay sideways and not get a strong breakout to the downside that I'm expecting. So as everything stands right now, actually I'm focused on gold, and I want to highlight gold pattern real quick here. So we
a lot of people are asking also, because it has been very choppy, and I know as a fact that a lot of people have been butchered, by gold lately.
So actually last week we talked about this pullback on gold. I said that we could go back to the area of a former wave 4. We have came in close enough to these levels before market turned lower, and this decline now looks very interesting, quite impulsive. So I would watch out for more weakness after any pullback. If I go to 1 hour chart, then you can see here, actually here it is on the right. It's actually an impulsive decline. Okay, so it confirms that maybe market has stopped here for a wave B and that we are headed lower after a pullback in wave 2. Now, strong correlation with gold has Aussie. So if just to make sure, just make a real comparison with Aussie dollar. That's 240 minutes.
Can tell you already that what troubles me a little bit with a bearish Aussie interpretation, although my medium-term bullish bias is bearish, I expected a more shallow recovery. What troubles me a little bit is that we've spent the last 3 days, sleeping a little bit lower, but we still within 3 days haven't even retraced the last bullish candle we had, and that troubles me a little bit. I wouldn't say that it turns me bullish, but I'm saying that it makes me think twice about being short of Aussie again, because I booked my profits being short, so I don't have a position now.
Okay, so actually the reason why I'm bearish on Aussie and why I'm expecting is clear correlation with gold. You can see here blue with gray lines. So actually we have seen push down on Aussie, push down on gold at the same time. We have an impulsive quality here on gold from that levels. So I somehow expect that Aussie dollar could also stay under pressure, especially if we consider that here on hourly chart we have 5 subwaves from recent high. Okay, so as long as we are below this high from October 13, I think that we could see push to the downside, maybe only for a temporary drop towards 77.70, or maybe even lower for impulsive maneuver. But in either case, I think that at least for the short term, we could see.
I know that this is not an Elliott wave thing, but also something else I forgot to mention it. And you know, since we're commenting together, let's also show, you know, the basic technical analysis approach. If you zoom out in the Aussie, yep, there you are. So if you go to a daily at the Aussie, another thing that troubles me is that the level that we actually found support on, that 77.40, call it. If you draw a zone, yep, exactly. It was
Yes,
the
okay.
breakout. Yeah, exactly.
Okay.
It was
Yes,
a multi-month breakout area. Yes.
Okay.
Being retested.
Okay, sure, I get it. But because I'm always looking to put together, you can see also here alternate count that I have labeled for potential end of a wave 4 right there.
Mm-hmm.
Okay, so it's actually, of course, your point is valid, but when I am looking for some setups, I'm trying to focus just on maybe on the next 3 trading days. So for the near term, even if we are headed higher, I still think that we could break beneath 78.17 and maybe then turn to the upside. So for the short term, based on gold, based on Aussie structures, I think that we could see a little bit more weakness before we go with your view to the upside, or either we go we see move to the downside into this red wave 5. Okay, because you can see here on the 4-hour chart, I'm looking at impulsive bearish count. And the reason also why I'm somehow trying to stick with bears is because not only because of gold, it's also because this recent recovery stopped at the area of a former wave 4 and at 38.2%, and also fourth waves are sometimes similar to second waves because both are corrective waves of the same
Yeah, you're
degree.
right. They were both sharp in this case. They were both sharp.
Yes.
You're right about
And
that.
you can see we have seen a nice turn to the downside, so that's why I'm trying to stick with the bearish view. But as I
Makes
said,
sense.
short term.
By the way, I also see USD yen remaining constructive at the moment. I mean, it held the support I was looking at, and now the pattern looks more to me like a flag of some kind. Do you still are you still looking for higher price? I see you are, right? Yeah.
Yes. Last week we mentioned that potential flat could be in the cards. I was looking for potential supports to hold around 111. We have seen a turn up for a little bit earlier, so we could be here making a running triangle here for a wave B, or maybe wave B already bottomed here, but nonetheless both are corrective price actions. So I think it's just a pose with an uptrend. If you make just a robust outlook here, dollar yen, just real quick. Okay, so 4-hour. So actually what we have here is a strong move up, and then we have just a pose. Okay, so no, it's not important which structure will form here. What I see is just a pose with an uptrend. Yes, it's consolidation. So clearly I'm staying bullish here for the short term, and would be expecting market to take this swing high out from that's where from.
Now I have another question for you to consolidate to see if we're seeing, you know, in a common way things. USD CAD, I know that a lot of people are tracking USD CAD, and USD CAD is currently stuck between, let's call it roughly a 124.50 support area and 126, which was the recent high. Some people have already started talking about the potential of having made a double top at around 126. Obviously, I remain, personally, I'm going to tell you my opinion, I remain bearish as long as we stay below 128. I do believe that there is another move lower for the USD CAD, at least one more move lower. But what do you think how do you think this recent consolidation is going to be resolved? Higher or lower?
I think that we will see higher prices and potentially retest this swing from August highs. It was a fourth wave of 1 lesser degree. I still think that this could be retested before we finally get and see move to the downside.
Push lower, huh?
Yes, it's actually a reason is this sideways price action
is a triangle
for the last 2 or 3 weeks. So it I just simply don't have enough of the evidences to say that top is here in place. Unless we broke this trend line support, then maybe I will change my view. But for now, it's just a small correction with an uptrend.
But at least you agree on the bottom level. So if we break 124.30, then we can already start looking lower. Yeah. I'm totally with you. That's what I wrote in my analysis as well. That the two levels to watch are 124.30 and 126. But yeah, as I said,
I'm just it just what bothers me is actually that crude oil has moved on very nicely to the upside over the last few days, and as you know, dollar CAD did not move much on this. So that's why I'm thinking if crude oil will find resistance in the near future, make a pullback, then dollar CAD could be. And
you know something, since you mentioned it, we have a bigger divergence with oil, because just pull on your charts USD NOK. I mean, USD CAD has not been following crude, which is a correlation that anyhow is on and off, for a long time now. But look at USD NOK. USD NOK actually has been even pushing. Yes.
NOK seems to be much stronger, in much better shape compared to Canadian dollar. So if anyone maybe is interested to trade in a correlation with high crude oil prices and looking for trades on FX, then maybe it should be better to focus on Norwegian krone rather than Canadian dollar.
What is your view on oil, by the way? I'm still looking higher. As long as we stay above 49, I'm still looking for at least 43.5.
Greg is looking for 54, I think.
Yes, and I'm bullish and will remain bullish. The most important is probably price action from 24 hours back. We have seen a sharp free wave drop, bottomed at 51.40. That's already the December contract, and then we turn to the upside. So I think the next leg is going to be higher, and what is probably the most important is this chart. Where I have it. I think I should have it somewhere here. Anyway, here we have this on a weekly. I'm looking here for a left shoulder. Okay, then you have head, and now right shoulder, and now we are
at not the most beautiful inverted head and shoulders, but indeed it can count as such.
Still valid. Yes, of course. Yes. It's still very valid. But if you will pull out maybe chart of a commodity index, okay, you will actually see that this recent consolidation since 2016 is much better looking in a free wave setback, and there's clearly pointing to the upside. So if commodity index is going to break higher, that's when crude oil should also rise. So
this view in commodities, this view for commodities, Greg, also probably bodes well with stocks just giving a correction before the last probably leg of a mania, because obviously commodities cannot be like ripping higher while stocks are being decimated. So I'm guessing we might have like some brief pause in commodities once we get within a few days, or perhaps at the beginning of next month, as you said, some kind of a pullback in the risk.
Look at this chart. That's on the right. We have Thomson Reuters Commodity Index. Okay, and we have clearly seen a move to the downside in three waves. Okay, you cannot say that this is not a flat. Okay, and also what I like is that we have seen a nice move to the upside. So if next leg is going to be higher here, then you can see here on the left, it's actually US crude oil. I think it's here in blue. No, sorry, it's in a red.
It's the orange one, yeah.
Yes, so actually you can see that both markets bottomed at the same time. So even if right shoulder, as I said, is not so damn clear, okay, it's still valid formation for prices to push higher. And if you take a look on this line chart, maybe now it's probably much more clearer when it comes to head and shoulders interpretation. Okay, so here we have left shoulder, head, and then you have here right shoulder. Okay, so to me that's a nice bullish head and shoulders pattern. And if we consider the Elliott wave count, if we consider the shape of commodity CRB index, then I think that
You know something, on the other hand, I don't know how well this bodes with the possibility of a strong last leg higher to new highs for the dollar, because I can't easily see the trifecta of dollar getting stronger, pushing to one more high, stocks resuming their move higher even after a short correction, and commodities going higher despite the move higher in the dollar. I mean, something has to give. You know what I mean, Gregor?
Yes, but of course I agree. But correlations for the last few months, even few years, are not so damn clear, because we have a lot of currencies that are trapped in corrections. Okay, so I do not trust those correlations so much at the moment. Not corrections, correlations.
Yeah. I agree with you. Correlations are breaking down. It's more than obvious, and I think this is also something that, if you go back historically, you find often at the last phases of a business cycle, and of a bull run in risk as well. Of course, this is not a timing indicator. I mean, that doesn't mean that when it happens, like in 1 month exactly, you're going to get a reversal, or in 15 days, or in 2 months. But it's usually also another sign from the many we have that we are close to the end of this 8.5 year move higher in risk. I don't know what do you think about that?
I'm really interested how actually stock market will impact the US dollar when it will turn to the downside, because, as you know, back then we have 8 years back we have positive correlation between euro dollar and stocks. Okay, now it's not that the case since Fed started with the QE. So actually, I'm not really sure if those kind of correlations will stay here forever as they are at the moment. And I would expect
according to the dollar smile theory, if the dollar strength at some point will recouple with risk off, will also have to do with which are going to be the drivers of the next crisis whenever that comes. You know what I mean? I mean, if the drivers are going to be, be coming from, let's say, mainly the US, and they're going to spill over, or they're going to be coming from somewhere else, etc. I mean, that remains to be seen. I think that nobody can safely make an assumption about that in advance. It's going to be interesting.
For sure. Markets are always interesting.
Wow, what a great demonstration of the team concept here at FA. You know, you had that guy Pinkert on for a little while. Then Blake came on, then Steve, then Grega. The only thing missing was Nick for the full month.
Yeah, Nick just finished moving, finished moving in her new house. So I bet she needs a couple more days to be completely settled in. But I'm sure she's gonna come by there.
So everyone, you could see that everyone being here, a decent or very good trader in their own right, still loves to bounce their ideas off each other. And that's part of the intelligence gathering process that we have here, as well as great questions from the community. I do not have a guest. Go ahead.
Yeah, which by the way, Dale, I've been seeing the questions that have been coming through, and I'm more than willing to answer them now, because I knew that we didn't have a guest. But I didn't want to interrupt Grega. I know that Grega, has limited time, etc. So it was, I think it was much more, entertaining and useful for the community for us to exchange some opinions before we can actually have a look at some questions.
Very edifying. Every time Grega's here, the Wizard of Waves is very edifying for me. And in fact, you know what? The most important thing is that after I listen to Blake and you and Grega, it helps me avoid my bad ideas. And that doesn't show up in my accounts, but it gives me pause before I click my mouse after I take a look at your views to adjust my views, and it's always a process. Things are always changing, and to be able to see people's work who I respect is a huge edge. So thank you, guys.
Okay, first of all, our friend Luca, as usually, has been sharing some charts, which I'm going to show after I answer some other questions, because I always want to see his charts as well, and I think they're useful for the community. And you know, he has a long-term view always in mind, which I always respect totally. You know, I
don't like to fade Luca either.
I think you should always be doing a top-down analysis. There's no question about it. But I want to answer a question that comes from Martin that has to do with how can I be seeing CAD yen move higher and stocks reversing. First of all, I believe that the CAD, for example, in several occasions can surprise to the upside, not the USD CAD, I mean the CAD itself, can surprise to the upside and actually support the pair, first of all. Second of all, we've seen that the correlation between the USD yen and stocks is not as high as it used to be. Third of all, I do have the reasons to believe that CAD yen is going to be pushing higher, and perhaps Greg is going to be right, and this push is only going to yield another 300 pips, 400 pips from where we stand, to 200 from his estimations, and my targets, I would say it's between 250 pips and 400 pips. And at the same time, for example, stocks might move higher, but less so before they reverse, because I never said that I believe that 2,560, which I just added, is actually the high. If you've seen, which I know you're attending often, if you had seen, Martin, I actually made the prediction days ago that I believed we're going to push higher from this ascending triangle once again. And, you know, I was looking towards the channel resistance, which comes at around 2,580 at the moment. You know, a couple of days later, it's going to be 85. But I wouldn't want to miss this kind of a reversal, because simply, you know, my gut feeling tells me that it's going to happen. So I'm very comfortable with getting out of the money here. I expect it actually to happen, but I didn't want to miss the downside. On the other hand, I said a while ago in the chat room, I was actually yesterday, and since the time the webinar began, I was long the USD ZAR. I went long when we broke above the highs of the spinning top we had here, because I had this little nice confluence of the 50% field, the triangle, the broken triangle resistance, this time acting as support on the 50 DMA. So once I saw this inside spinning top and we broke above it, I went long at 1335, and I actually closed that trade like what is it now? Is it like around an hour ago, for a profit of 1.3%. What I'm going to be risking in the SPX is roughly going to be 1.5% of a loss. I might stretch it to 2%. We're going to see. And I wrote specifically in the chat room that I'm booking this USD ZAR long, and probably, by the way, I'm going to look to re-enter if we test 1340, 1345. I'm going to look to re-enter, but specifically in my mind, I allocated this profit, which was a very fast profit. I mean, it's of the times you get lucky, because USD ZAR moves a lot. And, you know, I had the reasons to look higher, and it worked out fine. It doesn't happen like that always, of course. But I said that specifically, mentally, I've already allocated this profit for my SPU's stop loss. Okay, so, you know, for me, this profit is, you know, already a loss in the SPX. I don't mind if I get knocked out of it, but I'm really looking forward to a reversal here, and I'm going to stick with it. And now I had another question, if I'm looking to add further to this short position. Most likely not, although I have to tell you that if I see some kind of a big reversal candle in the following days, I might decide to do so. So if I get some kind of confirmation, sometimes, you know, when I feel very confident and we get some very big candle, etc., I might do so. But currently, I don't have such a plan. Okay, so that answers that question. That answers that question as well. Steven answered that. We had to see large money managers sell their stock holdings and risk missing Xmas rally season. As incredible as it may seem, says Luca, we may just keep going unless we have a dramatic event of overblown jump in yields. Luca, you know something, the consensus that everybody now agrees that this might be a year that has no pullbacks left. Personally, it also fuels my belief that we're going to see some reversal. I mean, sometimes it's a gut feeling, right? I'm not saying that what you're saying doesn't make sense. It does. But I'm just telling you, you know, how I personally see it. And by the way, let me show your pound yen chart, and let me then show. There is a friend asking about the New Zealand dollar with the yen, and we're going to show that as well. Okay, that's what you're seeing, and I'm in total agreement with you. Let me show you what I see. We talked about that. I don't remember if it was a couple of days ago. But yeah, that's exactly what I'm seeing. If you see my chart, it shows the same thing. And as long as we stay above this area here, if I zoom out, everybody can see, you know, how important it was. In essence, it looks a little bit like the CAD yen trade. We had a major area. In the case of CAD yen is even stronger because it was also the neckline of an inverted head and shoulders. We broke above it. We initially retested it. We held. If we actually end up holding this area, I'm also going to be looking higher. As you see, several days ago when we were up there, that's what I drew, that I would expect a move lower to retest that and the move higher. You know, still remains my basic view. USD yen, pretty neat hold of 200 MA. I'm in total agreement with you. I think we already showed that through Gregor's charts. I'm 100% in agreement. I also believe that the USD yen is. Let me show you what I'm seeing. I believed initially that this might have been an ascending wedge, but I had drawn this line as well, saying that perhaps it's a triangle. As it seems, it was neither. I mean, probably it was a triangle, but not the triangle I was looking for. Probably it was something like this, that kind of a triangle. Okay, so one possibility remains of a deeper pullback, which I don't think it's the main one, and another possibility remains this one. Okay, so yeah, I'm also constructed the USD yen. And Angela asks, gold ran into liquidity here, also a previous accumulation zone, 10th of October and back in August. I'm pretty sure because I see the timestamp, probably Gregor covered gold for you, Angela, didn't he? If not, I can go through it again, but Gregor was very specific about gold. His view is that the move lower is impulsive. I agree. If you remember, because I know that you're attending frequently, if you remember, I was looking for a failure up there for at least one more leg lower, and I think I have confirmation. And you know, any pullback, which is exactly what Gregor says, any pullback I think would still present, if somebody wants actually to be involved with it, would probably present a better selling opportunity than anything else. Oh yeah, the Kiwi yen. Sorry, I almost forgot. Okay, Kiwi yen on the positive side. First of all, I've said plenty of times that this is a huge flat top triangle. Okay, as long as we don't break below the ascending trend line support, a rebound is the most obvious scenario. We're seeing a rebound of such at the moment, and we're currently testing, you know, this descending channel's resistance. We've actually broken above it, and this horizontal zone that I have here. So, in my opinion, if we actually close above this zone, then we will be seeing another move towards the 83, 50, 84 resistance, which is like major resistance. So, you know, if we close above there, I would definitely not be bearish. Okay. On the other hand, you know, tread carefully here, because the positions you might be looking for should not be that long term, simply because the long term pattern is very, very clear, and we are currently more or less in the middle of it. So I think that, you know, committing for the long term while we're still trading within this pattern might be unwise. Yes, Martin, my pleasure. Yeah, my pleasure. And as I told you, yes, the SPX can easily move somewhat higher as well before that. Lucas says, all eyes on New Zealand tonight. Sorry to be boring, but National goes, no, you're not boring, mate. National goes with Labour, look for 0.68 in Kiwi, and pound Kiwi. Yeah, I totally agree with you. I totally agree with you. We're going to have event risk tonight. And this might be the next catalyst for another move lower, perhaps, because that's also what's Gregor looking for the Kiwi. I'm also inclined to believe that both Aussie and Kiwi are going to move lower. What, as I said to Greg as well, what put a little bit of a break, you know, in my mind, I mean, gave me a little bit of uncertainty, so I took profits in both the Aussie and the Kiwi I had last week, was the fact that the Aussie rebounded from a very, very significant area of support. And the fashion in which it rebounded was kind of unexpected for me. I expected the reaction from that zone, but a reaction that would look more corrective in the eye. But I'm still inclined to believe that, you know, the chances for a move lower are higher. So perhaps, you know, the New Zealand developments are going to be the catalyst for another move there, and that's also going to bode well with an Aussie Kiwi bullish bias. Pound Swiss, yeah, last one, and I think we can call it a nice webinar. Dale, I don't know if you agree.
Yeah, I do, and I just want to tell everyone that tomorrow I have an outstanding guest. I mean, this guy is an outstanding trader. His name's Michael Storm. His Twitter handle is @ForexBandits, and he fancies himself, it's even on his Twitter, as Robin Doubles Hood. So his goal is to take from the algos and give to the retailer. So don't miss it. Michael Storm tomorrow has a great reputation. He's been at it for 17 years. I know I'm looking forward to that interview. So be with us tomorrow for that. And we'll be on investing.com. So we're going to have some guests. So, you know, bring your questions. We're going to answer them, and be ready with your armor and your sword, because looking forward to doing battle tomorrow and every day.
Pound Swiss. Okay, I can give you a positive and negative for Pound Swiss. The recovery so far from this rebound does not yet look impulsive, but on the other hand, if you look at the medium to longer term picture, we had a triangle, we broke above it, and as long as this trend line holds, I think the medium term trend is higher. Only if I see a break back in the triangle, I will then believe that this was a fake move, and then we're headed lower. Okay, because you know, a false break is very often a very powerful signal that the opposite kind of move is going to happen. But until or unless that happens, I'm inclined to be looking higher. Okay, guys, thanks a lot. I'll see you all tomorrow.
Yeah, great webinar, Steve, with Grega. People really enjoy when you and Grega are bantering. Thank you, Blake. Thank you,
Not bad for having slept 2 hours, right?
Yeah, and remember, everyone, it's only money. You're very welcome. So money comes and goes. Time is gone forever. Thanks for sharing your most precious currency, being with us for an hour and a half or so a day. And look forward to working with you tomorrow. And don't just count your pips, count your blessings. Adios, face. See everyone in the arena, ready to do battle tomorrow. Adios.